All right, this is week 50, outlook 1 of 2. Let's go ahead and jump right into the analysis, starting with Euro USD. All right, here we go. We're still in the bullish run. Everything's starting to just slow down and consolidate more. I'm not expecting too much volatile price action right now. It seems that correlated to the real world events, everything is just at a standstill. Everything's stonewalled right now. We don't know. There's a lot of uncertainty in what things are doing. So there's actually a lot of transactions going on, not a lot of profit sharing. And what I mean by that is usually when we see these runs in the market from the macro perspective, that's usually when we start seeing the profit taking from those positions or from those trades or from those ranges being balanced. And so essentially, we're not in a range. We're still inside of a overall market bias of a bullish run. But if you notice from here to here, technically, a price leg in itself is a local range. And so we've essentially established this local range here, which is this price leg, this bullish price leg here. And we've been consolidating inside of it for, well, let's see, how many months now? August, September, October, November, December. Yeah, so almost half a year, right? That's August, September, October, November, and into December. And I wouldn't be surprised if we consolidate into, January and possibly into February, as we move into the holiday season. But everything right now is just at a standstill. So I'm not really expecting too much happening on the foreign exchange side. There's a lot more volatile markets. Obviously, the Nasdaq's always going to be volatile on the daily from the intraday perspective, but everything's starting to get jittery. A lot of trading, a lot of money is being moved around. Short-term trades are happening. So this is being reflected on the charts as consolidation, right? So that's why we're seeing a lot of this jagged price action, not really smooth price action that you would see here. So that's just something to pick up on if you're looking at real world events and then looking at the markets and trying to correlate, is understand what's being talked about in the news. Like right now, there's a lot of conversations around artificial intelligence uncertainty, defense uncertainty, just a whole bunch of things. I'm not going to get into everything, but just a bunch of topics. And there's a lot of transitioning, a lot of trades happening, a lot of buying, selling of products, buying, selling of major companies that's happening, transitioning of guards. All that stuff is happening right now. And that's usually what you'll see inside of a consolidatory period in the market. And it manifests in, whatever instrument that you're looking at. But primarily, if you're looking at the foreign exchange markets or the Nasdaq, the indices markets, it's really going to show up as that consolidatory period. If you're trading soybean futures, obviously it's not going to really affect that, but it might, But for the main thing, if you're talking about trading currencies or you're trading indices or commodities or crypto, you're going to see a lot of that. When you're in a consolidation period, you're going to see consolidation, right? And how to correlate that or to guide your understanding of that is when you see consolidation, that's when true trading is happening. That's when a lot of deals are being made. There's a lot of uncertainty in the market. And then once we break out of consolidation, that's when you start to see the record profit taking and profit sharing news that happens. It's like, oh yeah, the United States just did blah, blah, blah. And they just, profited off of this or that or whatever. Like those are the conversations that you're going to have right now. But when investors are, uncertain about certain events, you're going to get consolidation. And that's when you trust the bias. You lean into the bias because that's when people get antsy and they drop out of their positions, and that's how the market gets pushed down, pushed up, and constantly being pushed around, or really springy, or trampoline, whatever you want to call it, inside of these tight these ranges. But overall, if we're looking at it, we are still inside of a bullish price leg, inside of a bullish run. That is what we are in. I don't care about all this internal price action unless I'm looking for an entry or potential transition of market state. So tying that back into the perspective, that's why I don't look at the news, because it's all just noise. And when you smooth out the curve and you really look at the overall points, you'll see that even in this consolidation, moving higher in this price leg, it still moved higher, right? Yes, it may have taken a little bit longer or may have taken shorter, but it still moved higher. It's still a part of the bullish run. So currently, all that to say is we are still in a bullish run. We're still in the side of this price leg. We're still in the second impulse of this price leg. It's taking a little bit longer than anticipated, but it's taking its time. Like, I'm not going to force the market. I can't force the market to do what I want. I'm just going to align with it and trade accordingly. And so that's what's happening right now on Euro USD. So currently we took out this immediate liquidity point here and we pulled back, and it looks like we're beginning to pick back up a little bit of momentum. We'll see what happens going from there. Fully still expecting price to press on higher. If it transitions, well, then I'll wait for that analysis or that transition to happen and then assess the action that occurs. All right, on GU, similar story here. I mean, this one, we picked up a really strong price action here, really strong momentum in this bullish candle. We're starting to consolidate or pull back ever so slightly, but the momentum is definitely there. So I'm still anticipating price to break this this high here, this liquidity point, and solidify this bearish price leg, and that's when I'll be looking for entries off of the area of interest that I have marked up. So we're still in the bearish run. We're expecting the continuation based off of mitigation of the bearish price leg and balancing of the bearish price leg, and then continuation lower. The counter analysis, like I always do, is if this continues higher, then we look for what happens here. Do we have, what action occurs here? Do we have a liquidity point or liquidity draw, or do we have a breaker structure? And will that transition us into a bullish run, or will it just be a liquidity draw of the high and then we drop lower? So that's what we'll see in the future. All right, on the NASDAQ, similar, like I said, we're just in an uncertain time, still fully anticipating the all-time high being taken out because we are still in a bullish run. If I mean, currently inside of this price leg, like I said, we shifted the structural point from this low to this low based off of the liquidity draw that happened here. I told you the area of interest that I was potentially looking at, which was unlikely because of the price action that occurred. The real entry that I was looking for was down here, but I completely missed it. So I was looking for something a little bit higher, but that essentially is something that I don't like to do, is called chasing a trade and trying to force my analysis to be right and saying, yeah, price is going to come back here. But no, this was the entry based off of the models that I use. It was down here actually in the liquidity draw. And so I should have been in down here and price pressing higher. And now, you know, this area of interest, even though it's still valid, it may not be valid because we are in the impulse phase. It might be valid on the pullback. And so even though I have it marked up, I should not be expecting price to, you know, draw back here. And what I mean by that is, if I zoom in, this right here is a liquidity point, and price, it seems to be, you know, doing some sort of action here. I can't anticipate it just yet or justify it just yet if it's a liquidity draw or not. But if I do, if it is a liquidity draw, that is a possibility that price can pull back lower. But that doesn't mean it's going to come to my area of interest. That just means it might pull back a little bit lower. We are in the impulse phase of this, you know, liquidity draw generating this price leg. So I should be full on expecting price to continue higher. And if it does come lower, great. But if it doesn't, I won't be upset because I know that this will be a possible entry when we get the pullback. All right. So that's what I'm looking at on the NASDAQ. And then on gold, we 100% had a liquidity draw. This is something that I was looking at, and I actually got in on a little trade on this. Not from the high here, even though I had it marked out. I was moving some stuff around, so I got in a little bit lower. But ultimately, this was the play that I was looking for. There was a liquidity draw at this high, and so I'm expecting price to pull back to mitigate whatever liquidity point or liquidity is inside of the impulse portion of this internal price leg here. And then once that occurs, we'll see what happens from there. But as of right now, gold is actually, when I did some reanalysis, we're actually in a very prolonged price leg. And what I mean by that is the real low of this price leg is all the way down here. So we're actually in the deep premium of this price leg, like the deep premium. And it hasn't been solidified yet. That's the other really cool thing, is that we don't know if this is yes, it's a liquidity point, but we don't know if this is the high of the price leg yet, or if it's just, another liquidity point as we draw higher. This was a liquidity draw. It wasn't a break of structure, so I can't call this a solidification of the price leg yet. But I do know that the low of the price leg actually exists all the way down here, because it's the low that caused the break, and then we just been, trending higher during this impulse. So this is still the impulse phase. If this would have been a break of structure, that would have solidified the price leg, and I would be expecting price to pull back lower to mitigate any inefficiency existing in here. But because we had a liquidity draw here, I'm expecting price, to continue higher. And then ultimately we had another liquidity draw here. So now we essentially are just beginning to consolidate inside this area. Anticipation is showing me that, hey, we have a liquidity draw here. There is a play here. It is counter trend. But if this were to play out, I would be expecting price to take out this low internally and then see what happens here. And if it were to continue to go lower, then targeting, this low here, but ultimately this low here. And then once we take out that low, depending on if it's a break of structure or a liquidity draw, then if it's a break of structure, then, we'll get solidification of the leg, and then we'll look for, trading inside of the price leg. But I'm not going to anticipate too much there. That's just what I did after reanalysis. And that's what we're looking at on gold right now. All right. If you have any questions, let me know. Peace.